Afternoon, everyone. Welcome to the Investor Roundtable at F Street. My name is Nick Jung.
And I'm Josh Lurie.
And we're going to talk about success at Lakeshore Commons to date and what we're going to see in the future and our next phases. So again, going back to F Street, who we are, we're an alternative real estate company, an investment company. We've been in the business for coming on 15 years now, continuing to grow. As I mentioned, we're always planting money trees. Lakeshore Commons, one of our largest developments, a master plan community we've been working on for almost 5 years now. So really wanted to go through with us and continue to talk about it. So again, here's Josh and Nick going through the project today. So to get started, Lakeshore Commons, Josh, if you want to kind of get started on how this got started.
Yeah, so about 5 years ago, we worked on a public-private partnership with the city of Oak Creek. They've been instrumental to the success of Lakeshore Commons. We started building the infrastructure in phase one, which is now complete, north of $17 million, which has allowed for us to create the vertical developments and all the different projects that you see within phase one. The first phase, project number one, as you can see right here, that's 199 apartment units, coast at Lakeshore Commons that Nick referenced. You see the start date and the completion date, and within about 7 months from December of 2023, we were fully stabilized, which just speaks to the overall project, the amenity set that we've created, the natural trails, the distance to the adjacent park, which is a public park, Oak Creek Lake Vista, and then obviously Lake Michigan directly to the east. We've also created a unique amenity set, which we will highlight in the presentation. But why we're so excited about this next phase, which is Summit, which is project 3A and 3B right here, is due to the success of project one, which is 199 units of multifamily apartments. And now we're going to be embarking on these next phases right here. We also, project two, right here is 28 for sale townhomes, which we have built and are in the process of selling right now. And then we have project four, which is another 28 townhomes, just like this right here, this project right here. However, these are for rent. So project four, we're really excited about, Ivy Townhomes, which we are over 50% leased in a very short amount of time, in 3 to 4 months. We expect to continue leasing units and be 95+% occupied on this project in the upcoming months here.
Yeah, and as Josh mentioned, I mean, been working on the project for years. We've already invested through our partnership with the city of Oak Creek over $18 million in the infrastructure, which includes, redevelopment of Lake Vista Park, which is here, adding in all of these roads, as well as reshoring up these roads. So it's really created a great community because Lake Vista Park here, you have Bender Park down here, and then you also have the lake right there. So all of these projects have lake views. Many of the homes down here, which we'll talk about in a minute, we already have, there's 42 home sites down on the southeast corner. Of those, 21 have already been sold or built, in addition to the additional multifamily or single family units we'll be developing over on the west side on our future expansions.
Yeah, we're really excited because, as Nick mentioned, with these projects taking shape, the community is coming alive. There are people living, working, and playing here. It's really a vibrant community, and we're excited about these next projects, phase 3A and 3B, which we're calling Summit Apartments.
Right, so going to the developments now. So as Josh mentioned, Ivy, which if you'll just go back to the map here, is this project up here on the north side. We're calling it project 4, which is 28 for rent townhomes. That's the most recent project completed. Those actually just completed back in October of last year is when the first building was complete, and we've had occupancy on those now through this month. We're already at 14 of the 28 units leased. We're going to continue to lease that up through the summer. We're actually spacing those out as part of our leasing strategy. We don't want all the expirations quickly. Even though there is a large demand, we want to space those out. So that's part of our leasing strategy over the next few months here, is spacing those out so those renewals happen more in the summertime as well. So signing longer term leases, which have been happening. As mentioned, these are great homes. They're 2 and 3 bedrooms. Each unit has its own 2-car garage. So they've really been favorable for families, young families, people looking for their own space. And these units also have access to the clubhouse. So as mentioned, that's another piece of the development project, large clubhouse, golf simulator, fitness center, Olympic-sized pool, pickleball courts, basketball courts. So a really great amenity for this project, which has, I think, been a big selling point for the Ivy townhomes.
Definitely.
Going back, and I'll let Josh go through Coast.
Yeah, so Coast is the project, and Nick, if you flash back 2 slides, we'll just a reminder, Coast is project 1 right here. The 199 apartment units, which we delivered in December of 23. As I mentioned, we stabilized the project, meaning we leased at 95% of that project by August of 2024. 4 to 5 months ahead of schedule. Now we are seeing renewals, and we have a very strong retention rate, and these renewals are receiving rental increases, as you see, between $50 and $100 per month, continue to bolster our net operating income and our cash flow available to distribute to our investors. So we're really excited about the initial lease up. We're even more encouraged by the retention rate and the incremental revenue hikes that we're seeing at Coast. And further, it validates our investment thesis in the next phase of our apartment project Summit, which is 132 units. The first 75 units have been capitalized and built, are under construction. They will be delivered in 2025. As Nick and I will talk about, there is the second phase, which is an additional 57 units directly adjacent to the first phase of Summit Apartments, which we are currently and actively raising, and we'll get into more of those details in a few minutes here. But very excited about this next phase of apartments due to the success in phase 1, which is Coast Apartments.
Yeah, and something I want to point out here while we're looking at it. So we've got Coast here. So these are the current Coast buildings here, building, call it north and south, 4 stories and 3 stories. Part of the success of this project and this development specifically, and why we've seen demand is just these lake views. I mean, you can see about 60% of the units all have lake views, and really it's just immediate access to the park and amenities. So that's been a huge piece for renting these units compared to other units in the market. So that's been something we'll continue to see for the next phase and want to continue to see in phases going forward.
And Nick, just really quickly, you can kind of see the corner here,
Yep,
which is the site of Summit Apartments and the lake views that you can see between the 2 buildings at Coast. So also the next phase of apartments will have very nice lake views.
Right, and I'll show right here. So this is where the next phase is going to go, is it's literally a box here to this corner, and they're going to have great sightline views because they're actually slightly higher up. There's a grade change of around 6 feet between here and here. So by having that little height difference, most of these units will either have views of the lake through the Coast Apartments or over the Coast Apartments, or they're going to have them east over the shorter townhome. So another great part of the development is most of the units of our multifamily units and the single family homes and the townhomes all have lake views. So as mentioned, we started on phase, we're calling it phase 3A, 3B, Summit Apartments, F Street OCLV MF 2. We closed on late in 2024. That was as mentioned, the 70 units approximately that we're putting up on the south side. And now we're going to be going on the north side, which we intend to start sometime between March and April. And we're starting on the raise now. And again, part of that is following the success of Coast and following the success of Ivy, and really just seeing a strong demand in not only Oak Creek, but specifically to this project to be on the lake. So that's why we're continuing to do it, and a couple other reasons as well. So again, OCLV MF3. So this is the 57 unit market rate development. Again, it's the north side. This development, this is the phase we just started in October, and that is now underway and should be completed in October of this year. This next phase, Summit North, will start, as mentioned, sometime likely in April. About a 12-month delivery, so we'll be delivering nicely staggered with that first phase on this. Knowing we'll be doing that, we conservatively assume we'll be leasing up over approximately a 12-month period. That being said, knowing how fast Coast leased up, and with this building delivering sometime during the summer, we're likely going to see a much stronger lease up, but we always like to be conservative.
And one thing I want to add, and Nick can talk about this, and one thing we've intentionally done as a team and orchestrated is this was initially one project. We did divide it up for a few reasons. One of those being, as Nick mentioned, the staggered delivery of the units. So while this will deliver about 6 months prior to, well, this project that we built in October will deliver 6 months prior to this new project that we're starting construction on in March or April of this year. It allows us to hit the market from a great timing standpoint to increase absorption in our timeline, which all that does is allows us to get to our refinance execution earlier on, provide liquidity to our investors, and start the cash flow cycle. So we're really excited about breaking this project up, making it sequentially make sense and favorable to our investors.
Yeah, exactly. And as Josh mentioned, and I mentioned earlier, you really have the sight lines. So this building all has sight lines to the lake from here, and the north building all has sight lines from here and here. So it's, again, the lake views is really just what differentiates this product from any of the other products to be delivered in the market. So I think that this is really the picture that shows it more than anything else, is just how much this project has moved since the beginning. I mean, coming from truly just, well, old facilities now into land, into just this great development on the lake. So I think this is really the best way to see how the Summit development and Lakeshore Commons in general has evolved and what this next site's going to look like. As mentioned to the left here, we eventually will be redeveloping this area and would love to talk to you more about it. We're still working on a mix of single family and multifamily products there, which we'll hope to announce sometime in the next, likely sometime in the next 12 to 24 months as we complete Summit, complete the lease up there, and complete the phase 1 of single family homes here down on the southeast.
Yeah. So this this slide talks about a summary of the capital structure here and how we set out the investment. This investment, F Street OCLV MF3, which is the second phase of Summit Apartments, pays an 8% preferred return on Class A equity. After that hurdle, 100% of that remaining cash flow goes back to you, the investor, before there's any split with us, the sponsor of the deal. And as you can see here, once 100% of that capital is paid back, post preference of capital to you, the investor, at 8%, it goes 65% of all free cash flow and proceeds from any capital event, refinance and sale would go back to you, the investor, 35% back to F Street. Our goal as a company is to make sure that your investment is de-risked and we're paying you back 100% of that capital to reduce your investment balance before any splits occur. On the right-hand side, kind of shows you a timeline of when this would occur. The project would be completed in Q2 of 2026, which is approximately 1 year after the commencement of construction in March of 2025 this year. Subsequently, within 1 year after that, so 2 years of total project, that's when we would enter into a refinance to create some liquidity, stabilize the project, reduce interest rates, establish budgets, and make sure we're getting to a cash flow cycle that we're distributing every quarter. So really excited about that, really confident in our investment thesis here, followed by the success of Coast. So anything I missed there, Nick?
No, I think that's perfect. I think one thing we also want to mention is we do also have financing lined up for the project. So we already have a lender who's got the deal signed up that also did the first phase of Summit that will continue in the second phase. So they're already lined up. They won't be cross-collateralized. But the fact that we have a lender lined up and we really are shovel ready, we're just waiting for that timing, shows you, this project's here, it's ready to go. And as mentioned from our past success, we know we're going to continue to be successful here as well.
Absolutely.
So just going through the metrics in general, I mean, right now we're projecting on a 4-year hold. Again, an IRR is really just, a picture in time. We don't know. We always work to find what's going to be the best for our investors from a short and long-term perspective. These are what our metrics are based on our current rents, how we're expecting rents to grow based on our lease up. So again, estimating around a 17.91% IRR, which would be around an 8.62% cash on cash return during years 3 and 4 once we're stabilized. Once the building stabilizes, we'll target a refinance. But as mentioned, once we're stabilized and cash flowing, that's when we'll start to distribute cash flow. So using Coast as an example, We closed on that deal in July of 2022, and we started distributions in end of Q2, early Q3 of 2024. So it's right around that, just under the 2-year mark that we actually had cash flow that we could distribute. So how this would work is if you invested $100,000, we're projecting in year 4 when we'd sell, there'd be about 1.87x that, so you'd be receiving $187,000 approximately. So that's how we're showing it on a 4-year hold. Another just benefit, and I don't know if we've talked about this, is their TIF incentive. So as mentioned, the city of Oak Creek is extremely supportive of the development. They have provided us a tax incremental financing incentive. How that works on this deal is on our project, we're receiving a 95%, we'll call it a rebate on our real estate taxes for 19 years. So of that, that's projected to be $3.396 million over a 19-year period. So the beauty of that is our investors benefit from that. So how that works is when we pay our taxes, we'll receive a rebate from the city for 95%. That goes back to the project and is shown as cash flow. So that's additional cash the project's receiving, and that goes right back to our investors.
Absolutely. If you flip one slide back, Nick, I just want to make one comment. A lot of our investors over the last several years, existing and new investors that have invested with us, ask about this internal rate of return, and it's a time value sensitive metric, right? We model at F Street different return periods. We have a sensitivity analysis that shows, hey, what happens if we sell in year 4? What happens if we sell in year 7, right? So oftentimes that last cash flow from the sale can alter and modify what that IRR is. Oftentimes, the longer you delay that sale, the IRR might be less. However, that equity multiple might grow and might be well above the 1.87. So we look at none of these in a vacuum. We look at the aggregate return profile as a whole. We want to make sure at the end of the day that we're executing in the best manner for our investors and selling the asset when it's opportune. We don't want to be forced into a sale. We don't have a timeline where we need to exit. We like to weigh all options, evaluate when it is most opportune to refinance, when it's most opportune to sell. But we go in and we just want to execute to maximize returns for our investors.
Yeah, 100%. Another one of the benefits that we see for our investors on these ground up developments is the tax benefits. So on these deals, like most of them, we do run a cost segregation. Right. That usually, the tax benefits for a project like this usually come the year after. So we'll start in, say, April of 2025. The year of 2025, we're not going to fully deliver the building until 2026. But during the year 2025, there will be some losses because we have zero income because the project's under construction, but we'll show some losses there. But in 2026 is when we'll be doing a cost segregation study because the building will be fully delivered and receive occupancy. So on the 2026, 2027, when you receive your K1s, we'll show those, and that's great for passive losses for anybody that's investing in these deals. Right. And might be investing in some of our other projects that are receiving cash flow. Definitely. Or might have a large sale that they have in that year. So just another thing to consider when you're investing in these real estate assets.
And if you have specific questions regarding what Nick just talked about, depreciation, how that impacts you from a passive loss to offset passive gains, specifics about the TIF, we're happy to answer all those questions via email, via call. Right. Our whole team here at F Street and our investor relations team loves to have these conversations to help educate and how we can show you how these deals actually materially benefit you from a tax standpoint, et cetera. So we are always available.
Yeah, absolutely. And just our partners on this deal are the same as our partners on the first, on not only on Coast, but on the first phase of Summit with Stevens Construction is our general contractor. They've done an excellent job on the Coast product, and they're continuing to do a good job on the south of the Summit. Harmonic Residential is our property manager who manages the entire Lakeshore Commons, including the homeowners association. They're always our partner in Wisconsin here on our new developments and have done a great job on lease ups. And of course, Rinka designs wonderfully. So great designs, been a great partner with us for the years. Yeah. So excited to be working with all of them again.
Yep. And here are just a couple renderings of the project at Summit and what that will look like. So really excited about adding additional multifamily options in Oak Creek. You know, when we first started this development, the goal was to provide a myriad or a variety of different housing options, which we were able to do through townhomes and for sale products and villas and multifamily apartments. And we've even seen people that are renting at Coast who love the community, who love the unique amenity set, who are now buying homes at the Lakeshore Commons community. We've created a really unique amenity set here, not just built, you know, not just pools and pickleball courts and basketball courts and a clubhouse with golf simulators, but also the natural amenities that we've talked about, the walking trails, the public park, the Lake Michigan, which is a great amenity with a boat launch right on the park and a beach. So really unique amenity sets that are difficult to recreate without having the shoreline here. And one thing, Nick, just to talk about is the city, the bluff and the infrastructure that they're putting in directly to the north.
Yeah, so the city, and this is just another exciting thing that the city of Oak Creek is doing for this area. Excuse me, they're doing approximately a $40 million additional bluff stabilization on the north side here, which will expand a river walk and a bike path north. So again, the city is just showing its long-term commitment to not only this project, but to the city itself, and continuing to invest in not only Lakeshore Commons, but development in general, which has also been great for businesses as businesses expand in Oak Creek, which is great for the labor force and also for our residents.
Absolutely.
So again, we'll open it up to questions. If anybody has any additional questions about Lakeshore Commons, about the next phase of our summit development, or just questions in general, we're happy to answer them. Yeah. Good question. Go on.
Yeah, I can take it.
Yeah.
So as you, yeah, the question is, how has Coast performed relative to expectations? So as we conceive the project, you know, it's tough to evaluate the IRRs because we haven't actually got to a sale, right? We've built the project, we've stabilized the project, we're producing cash flow every quarter, which is in line with our projections. We leased up about 5 to 6 months ahead of schedule. So really excited about that, obviously, especially for delivering additional multifamily, which we're doing here at Summit Apartments. We are very pleased with the performance, the lease up cycle, the build cycle, staying on budget and on time. We obviously can't benchmark right now what the IRR is because we don't know what that future cash flow is going to be when we exit. As Nick and I mentioned, we want to execute in the best way and optimize the investment for the investors and for us, who also, we have cash in the deal as well alongside our investors. So until we get to that final metric, we can't benchmark it to our IRR, but the project has shaped up and performed very, very well to date. And I guess I'll pause there. Any other additional thoughts?
I mean, really, the only additional comment is from like a cash flow perspective to our pro forma, we're meeting and exceeding that. From what we expected rents to be and what we're achieving, we are achieving those rents, and we're benchmarking those rents not only with Coast, but we're also doing that with Summit. What we talked about earlier, and where we're starting to see those increases, because in the market right now, we haven't, other markets haven't seen those increases that you'd hope in the multifamily market, but this area has, especially on, so these units here and these units here are lakefront units. As mentioned earlier, we're seeing around $50 to $100 increases on renewals. We're seeing over $100. We're targeting $100 per month renewals on the lakefront units. But some of the units, which are the 1-bedroom lakefront units, which are on the top floor here, and especially over here and over here, because these units are 3 bedrooms and these units are 3 bedrooms, but the 1-bedrooms are over here. Those we're seeing $150 increases. So it's really unit dependent, and you know the beauty of these is there's high demand for them, and that's again part of the reason we're doing Summit and continuing to grow the multifamily portfolio in Lakeshore Commons, is because of just that demand to be on the lake, and why be on the highway when you can be on the lake? So that's been a big part of that.
Yep. So the question was, excuse me, when will the investment window close for MF3? So we right now have already raised a significant percentage of the required equity, about $6.5 million of equity required for phase 3. We are going to continue with our existing and new investors, and the final date would be March 15th to have all of your funds in. As Nick mentioned, our construction loan is lined up to close in mid-March. We are shovel ready and ready to go. So as we continue to raise the remaining funds, we are ready to break ground as a shovel ready project.
It's a good question. So the question is essentially short way the question is there a different unit mix and how will that affect lease up? So I'll just go back to really show through. So actually, I'm just noticing this is actually the south building. This is the south building that's currently under construction. And this is actually, no, it's not. No, this is the north building. So this is the north building. Yeah, and this is the south building.
Yep.
So the north building, if I go to how it looks, is actually an L shape. So that has more units of, there's actually slightly more 2 bedrooms and 3 bedrooms because they have the prime 3-bedroom units on the corner here, which, as we talked about earlier, have those really just picturesque views of going down coast. But it has a very similar mix of 1-bedrooms compared to, but less studios or junior 1-bedrooms we call them, that are in the south. So those really, we've seen a large demand for the 1s and 2s in Lakeshore Commons so far. The juniors as well have been very well received. The 3 bedrooms, if they're in the prime location, have been very, very well received. And that's been a big part of it as well. I guess we don't have the buildings on there, but yeah, that's really the main unit mix between the two. We anticipate lease ups around the same time. Units are filling around the same throughout the asset classes, and we've really arranged those 1, 2, and 3 bedroom mixes well to what we've seen in the market.
Yeah. Thank you, everybody, for your time. If you do have any questions on any of the topics that we discussed today, please don't hesitate to reach out. We love engaging with our investors and chatting about opportunities now and in the future. So thank you all for your time.
Thank you, everyone.